Hello, this is Larry Jones with your Federal Milk Marketing Order 33 update, and I'm recording this on April 16, 2022. This program is brought to you by Nobis Agri Science in conjunction with Balchem. So let's get started by looking at your milk check. So you should be receiving this milk check here in the next day or two, and this is based in basically Cleveland, Ohio, Keega County, Ohio. And the bottom line is your statistical uniform price was $23.38, and that's $1.19 per hundredweight higher than February. So if we look at all the different orders, again, your $1.19 higher, that was actually pretty well in the middle. The lowest order was down here in the Georgia area at 95 cents, and the highest was Wisconsin, Minnesota at $1.47. And you can see how these would generally lay out because Class 3 came up $1.54, and so anybody that's very high Class 3 had a very good increase. Now you might say, why did California have $1.35 when they're very high Class 4? Well, the reality is they're depooling Class 4, so they're only getting paid on these three components. So they actually increased much more than we would have expected if they were not able to depool. The average across the nation was about $1.22 increase per hundredweight. So I want to look at your order for just a minute because you do have the ability to depool, unlike Order 1, for example. And this is your Class 3 utilization. So how much of your milk went into Class 3, which is largely cheese, and we're about 48% right now. And you can see, big areas when you were depooling Class 3. And then we do the same thing for Class 4, and you've got very little going into Class 4 right now, so probably you're depooling, also. So you've gone from that 16%, down to about 3%, so there's a fair amount of milk being depooled. And again, that overall will lower your PPD. So I wanted to come back to the difference between Order 33 and the Northeast Order. Just kind of look at this because the PPD for the Northeast Order was minus 47 while yours was minus 35. And the question is, why is that difference? Well, the real answer is it all depends on the utilization of the different classes. And so this is the change in your region versus the change in Order 1. And again, they're very small changes, but at the end of the day, it's this distribution that gives us that 12-cent difference. So here are your statistical uniform prices for the last 2.5 years. And this has just been a very nice ride up to where we are right now. And it's been very strong. Basically we've been increasing now since July of this last year. So if we look out in the futures right now, Class 4 is generally higher than Class 3, except that it did cross over here for a little bit in May and June. But more importantly, Class 3 is pretty well straight down. Class 4 is level here for a little while and then pretty well straight down. So that's what the futures are saying right now in milk prices. So I put these into your projected statistical uniform prices. Again, I make a lot of assumptions when I do this, but we're going to see it peak out here, $25.86, $26 somewhere in June, and then trickle down and then start down a little bit faster, at the fourth quarter of this year. So if we just go back and look at your Class 3 prices, we had a low of $15.95 last August. This was $22.45, so pretty well a straight shot up. And again, futures right now have got Class 3 at, kind of popping above 25 and then coming back a little bit, but that's how they closed on Friday. So again, if we look at the individual components, fat was $1.85, back here, and we're $3.09 now. So that's been the star of the whole system here. So we just had this huge uptick in fat prices, and they're going to hold in here probably $3 and change here for a while, as long as butter stays up reasonably well. And if we look at the percent fat, again, you guys are just doing an amazing job. We see the seasonality, but if we look at where we are now at 407 in the market, you were $3.99 for the same time last year. So that difference right there is 25 cents a hundredweight for the average farm. Protein prices, again, we had a low of 232. Right now we're up just a little bit, but we're going to make a big jump this next month to like 336. We could push $4 pretty hard here, you know, in the second quarter time frame if cheese stays up where it is right now. And just like fat, you're 325. A year ago, you were 321, somewhere in here. And right now, that difference seems pretty small from 321 to 325. But again, that's 11 cents a hundredweight. So you take that fat increase, you take that protein increase, you know, you're 36, 37 cents a hundredweight just by having higher components compared to a year ago. In an effort to try to understand what's going on, I plotted out here, this is the weekly closes for the Q2 contracts. So that would be April, May, and June. And you know how they've closed here for the last few months. And so what I see in class 4, you know, bouncing around, but it's really kind of leveled out here at $25. This red line here is the day that Russia invaded Ukraine. So now with class 3, you can interpret this two different ways. The way that I was interpreting it is we were kind of coming up, but we were leveling out here at the 22 and change. And so now we have what I call a war premium that is not justified by fundamentals. But when you look at this a little bit differently, you could actually draw this linear regression in class 3 and say, you know, really, this was a bit of an abnormality right here, and in fact, we're right on that target of where we've been, you know, starting ever since back here in November, and so maybe it should be at $25. I don't happen to be in that camp, and I'll give you an idea why here in just a minute. So there are two main questions that every dairyman ought to be asking themselves. And number one is, how can I protect these high milk prices? And so I am not going to give any recommendations here, just kind of some observations. So insurance can be expensive. I mean, that goes kind of without saying. And so one of the things you can do is lock in certain milk prices with either DRP or buying puts, but then you have that premium to deal with. The other is you can sell contracts, but again, you may not fully participate, you know, in the bull market. And so the question that I think really a person hedging has got to ask is, if you've got a complete bull market, are you willing to capture 70, 75% of that? Or are you one of the people that really want to capture 100% of it? But if you have a pullback in the bull market, you're willing to accept that risk. And then the fundamental question that I get asked almost every day is, how long will this bull market last? And again, I really don't know. I have an idea of how it's going to end. I just don't know when it's going to end. And there are two things that are really underpinning everything right now. That is the export demand. And they're kind of coming back and ask the question is, how big is our cheese surplus? Because if our cheese surplus, stays, pretty reasonable, these prices can stay here for a while. But if all of a sudden we start seeing a bunch of surplus, then, all bets are off. The other is there's a real concern that there's really limited production, either due to high feed costs, lower cow numbers, lower heifer numbers, all of these sorts of things. And one thing I know about dairymen is that they are very resilient and they have a way of making milk anytime you would think they wouldn't be able to. So that one doesn't scare me quite as much. So the last report that we had from USDA was actually the dairy products report here just a couple weeks ago. And what that showed us is that we produced a tremendous amount of cheese in the month of February. We actually made 1.1 billion pounds of cheese when we thought, estimates were like 1.05, 1.06, somewhere in there. So by all accounts, the amount of cheese made in February was just, crazy high. Now, one of the problems is that this cheese won't end up in cold storage for 30 days because it's fresh cheese up to then. So really we've got to wait to the March cold storage report to see how much of that cheese actually left versus being thrown into cold storage. We also found out that we added 24 million pounds of cheese to cold storage, in the month of February. So that kind of related back to January. We now have 1.47 billion pounds of cheese in cold storage. And so again, that is an all-time high. And so when we get these next reports, it's going to be interesting to see exactly how these numbers continue to play out. So this is the calendar, and this next week is a very important week. And so we've got the Global Dairy Trade Auction on Tuesday. On Wednesday, we'll get the milk production report. We'll also get the third National Dairy Sales report for April, and we'll get the advanced prices for May. And then on Friday, we get the cold storage report. So everything I've been reading right now is be ready for a highly volatile week, because any one of these three major reports have the ability to rock the market. So if we look at the global dairy trade, we had 4 very strong auctions that happened twice a month, and then we ended up with 2 that were down, which started to put a little bit of a bearish tone on things. But now the forecast for this one on Tuesday is down another 1.5%. And then it also is suggesting that cheese could be down almost 2% in price. And these are the estimates from Nate at StoneX. The other thing that they just recently published, which is starting to get some attention, is the difference between the Class 3 price and the New Zealand whole milk powder. And whole milk powder has been dropping off. Now there's a couple reasons for that. China's got all the lockdowns. New Zealand actually had an increase in production. But the Class 3 price continues to go up. And you can see historically, these don't deviate vastly. And so the question is, can that Class 3 price, keep that momentum up, even though we've got whole milk powder coming down? So here are my estimates for the March numbers. So right now, I have us about 68 pounds of milk per cow. And again, down here at the bottom, you can see what's happened the last 7 years. And so we've just been slowly inching up the milk per cow. And so about 68 is where I think we'll be. I've got production up about 2%. And so if we do that, we're actually going to add, somewhere around 15, up to 30,000 cows. So again, I think we're going to be out of the contraction mode and into the expansion mode. And the real issue to me is how much cheese will be going into cold storage. If we look back historically, most of the time, we're adding about 20 million pounds would be a typical March number. Last year, we took away 20 million, but the year before we added 104. That was at the beginning of the pandemic, so that was just a really strange year, so we can't look at that one too much. So again, if we end up with 65 million pounds added, that is going to give us a disappearance in February of 1.125 billion pounds, and that's going to give us 41 days of excess cheese. Again, this disappearance number I actually increased to try to accommodate what's going on with the domestic demand as well as exports. And the reason I get concerned about this days to excess cheese is every time we've hit 40 days, except during pandemic, we've ended up with a pretty low milk price that drove cheese out of cold storage. And again, about $1.55, $1.65, $1.59. And so right now we have increasing stocks at the same time as we have increasing cheese prices. And so how long that's able to sustain itself, I'm not quite sure. But this is the number that I am really focusing on as to whether the industry can keep legs under itself. So here's the historic prices of cheese. And again, it's hard to get over $1.80. Sometimes we get over $2, back here in 2019 during the pandemic. But if we look at the futures contracts right now, we're running 240, in May and June, 230s all the way through November. And so these are going to be numbers that are clear up here. And so the question is, do we have the export to support that? And do we have the domestic consumption to continue to support that? So last month I showed you the cheese exports for January. And so that came in at 5.56% of the cheese produced in January was actually exported. We now have the February numbers, and it looks like we exported 33,129 metric tons, and so that comes in at 72 million pounds. We made that amount of cheese, which means our exports are 6.57% of total production. So again, we went from 5.56 up to 6.57. So again, a 1% increase. And that's about 9 million more pounds of export than January. But we got to put that into context, because we're looking to have as much as 50 million pounds of surplus in February. So are we exporting enough to offset this excess cheese that's going to be going into cold storage? And we'll have a very good answer to that by Friday. The other thing we keep an eye on is the slaughter data. So we get weekly numbers. The last one is for April 3rd. We had about 60,000 for the week ending the 3rd. This has been coming down, and we will come down a little bit in the summertime, but we're coming down pretty quick right now. And the 4-week average is about 64,000, and we're down just about 9,000 cows, a week compared to 4 weeks ago. So again, I think the herd is actually beginning to increase a bit here. Just a couple of things on crops as we finish up here. So it looks like you guys are looking pretty good for soil moisture. Out here in Texas, Oklahoma, the wheat area is really, really dry. This area has got a lot of moisture with all the storms that are coming through, but you guys look to be, if anything, a little bit on the wet side. And then the other thing that's going on right now is this intrusion of this cold air. It got really bad out here in the high plains and the upper Midwest. But you guys look like you've got a fairly good shot of cold air on you right now. And the problem with this whole scenario right now is it looks like it's going to be delaying corn planting by a little bit. We're not in crisis mode yet, but I'm sure you guys are itching to get out to the fields. Instead of looking at individual corn and bean numbers, what I've started doing is looking at a herd that's feeding, 8 pounds of soybean meal and 8 pounds of corn meal. And when I say 8 pounds of soybean meal, that would be all of your protein mixes, whether it's Amino Max or Soy Plus or whatever it might be. And so I plot this graph as to how it's changed over time. And again, right now we're about $2.83 a cow a day to have that 8 pounds of beans and 8 pounds of corn. Back here in November, we were around that $2 number. Historically, we've been more in this $1.50 number. So there's no doubt that, we've increased feed cost about 83 cents, from the low back here in October. And from historical numbers, we're probably, $1 a cow a day higher, in this purchased energy and protein scenario. And that is in the face of seeing milk prices, increase by $4 or $5. Now, I know these feed costs are not the only thing impacting milk price. The other is fuel, and I always track the heating oil contract because that's a proxy for on-farm diesel. Again, when the war hit, we jumped way up, we came back down, we kind of come around. Well, now with this intrusion of this cold air, this is going to be pushing $3.85, pushing $4 again. And again, it's got to do more than just the cold air. It's got to do with what's going on with oil prices and oil exports from Russia. But again, we were thinking, $2 was kind of a number that we should have been locking in. And then we got up here, $2.80, and everybody's, well, it's going to come back to $2, and so now we've jumped $1 higher than that. So again, this is a significant on-farm cost. So I want to leave you with just one final thought, and the reason I do this is I keep hearing these comments, milk prices got to go up because corn and wheat went up this last week. But we need to remind ourselves that the only way that increased feed costs impact milk prices is through a reduced supply. And so if farms are not reducing their supply of milk, either culling cows or less milk per cow, then even these increased feed costs are not going to force milk prices up. And so, we've got to kind of make sure that the fundamentals are in line. And what I've kind of believe overall is that there's nothing like a cure for high prices other than high prices. As we move into spring planting, I hope everybody can remain safe and keep vigilant for vehicles on the road, because big farm equipment is always an issue when it comes to motorists not paying attention. And I hope everybody has a great month, and let me know if you need me to do anything for you.